Hi, and welcome to the Stockscores Market Minutes for November 21st, 2014. This week, the topic, Go Where the Action Is. I'll get into that in just a moment. First, I want to let you know about a live webinar I will be doing on Tuesday of this week at 9 o'clock Eastern, 6 o'clock Pacific. In that webinar, I will show you the Stockscores approach to trading. I will walk you through the process that I use for identifying both longer-term investments and short-term day trades. So be sure to join in on this free webinar. You can register using the link on the Stockscores.com homepage. Just go to Stockscores.com and you'll see right there on the homepage in the upper region a link to register for the webinar. And once we have you registered, you will be able to receive an email with the details for linking to the webinar. All right, let's get into this week's topic. That is, go where the action is. The easiest way to beat the market is to trade stocks in the area of the market that has attracted buyer enthusiasm. There are always going to be hot sectors, hot themes within trading, and if you can figure out what those are and focus in on those when you're trading, you can have a great deal of success. So for example, in the first half of this year, the hottest sector of the market was the Canadian energy sector. From roughly February until the summer, it was in a steep upward trend and really an easy place to make money. Well, since the summer, it has been a terrible place to trade because that has went into a downward trend. Another theme in the month of October was fear. During October, we had a correction, and the result was that fear gripped the market. We had a lot of volatility, and so the best place to trade was within the fear index, or the VXX, the VIX ETF. Right now, the hot area of the market is U.S. large caps. They're moving to new highs. They've got good upward momentum, and that has been the easiest place to trade in the last month. So what you want to do is, I would say on a weekly basis, if not daily, scan the market using the market scan and look for themes. Look at the company names that come up. From that, you can figure out what sectors of the market are doing well. Look at the price of the stocks that are coming up. You'll get a sense of market cap. And just look at what is motivating the flow of money into strong stocks. So what I will do is I'll go into the market scan and I'll just do something very simple. I'll say, okay, show me all the stocks that are up at least 10% over the last 10 days, for example, to get a sense of what's been happening in the last couple of weeks. Now I want to set a minimum number of trades so we don't get too many candidates. And I might also set a price range. Just, a 10% gain isn't really a big gain, so I might say stocks at least $1, because a penny stock can move up 10% very easily. All right, so then I run the report and I start looking through the charts looking for themes. So I say select all. I'm having a little problem with my mouse here. There we go, select all. And I start viewing the charts that come up. So there's a mineral stock. Now a lot of these, when I'm looking at them, I see stocks that are moving up into pessimism, not really what I want. So short term, in the last week or so, we had a bit of a bounce back in the mining stocks, but they're still fighting a pretty steep downward trend, and I see that when I go through these charts. Now, if I'm looking for sectors of the market that are doing well, I really want to focus in on those that are moving to new highs. So as I'm continuing through these, I continue to see a lot of gold and copper mining stocks bouncing back from oversold. That's been a theme the last 2 weeks. But is there other themes? Well, when I get into some of the higher price stocks, I may find that it's more the large cap earnings-based plays that have been doing well. So I just cycle through the charts. It's a relatively quick process with the market scan and just look at themes. How many gold stocks have we seen come up so far? Been a lot of them, but it's been a short-term theme because when you look at the charts, the strength here is just over the last 5 or 10 days. So you can vary your market scan to look for different things. Maybe you want to look at the gainers over the last 60 days, over the last 200 days even. Whatever time frame you like to trade in is how you should do the scan. I did a relatively short-term time frame, gains of the last 10 days, and I'm seeing a lot of gold mining stocks making bounce backs. Now, does that mean it's the place to play? No, that's just been the theme the last 2 weeks, and we have to see if that continues. Generally, what I see on these charts, however, is these gold mining stocks rallying up to resistance at the downward trend line, and so they're likely going to stall in the short term. All right, so that's the way I use that particular concept. All right, let's get into this week's market analysis. Here is a chart of the S&P 500, which as a theme represents U.S. large cap stocks. And you can see that we rallied back from the correction that we had in October, and we're nearly to the top of that upward sloping channel. I've drawn the red line as the upper boundary of that upward sloping channel, and we're almost there now. It just about touched it this week, so we should be running into a little bit of selling pressure in the next week or two here as we come up to that level of resistance. Now, realize that as we go into the month of December, we're going to start to see some tax loss selling on the sectors of the market that have done poorly, so namely energy, materials. They have done poorly this year, and so people are motivated to sell those sectors because of tax loss benefits. All right, let's get into the US Russell 2000 index, which rallied up to some short-term resistance at the summer highs. You can see right there, the highs at the end of August is what we've hit and been stuck at. I think we could still break through that, but we're also then going to get stuck at these highs from early in the summer and early or in the midwinter of January, February 2014. So upside relatively limited on the small caps, but it is building a nice base. So once it can consolidate and build some optimism in here, we could see this sector perform well. For now, I think it's still a sector to be pretty cautious with and selective with when you're looking at those stocks. TSX 60 had another good week to the upside, helped in part by a little bit of a bounce back in those energy and gold mining stocks, which benefited this week, but really underperforming the US market. Now, as I said in past weeks, this Canadian index is really the tale of two markets. You've got the commodity stocks and then everything else. The everything else, the banking names, the companies like that earn things, you know, that actually make things as opposed to going out and mining and pulling things out of the ground, those stocks are doing quite well. But the energy and the mining sector, which make up 35% of this index, have been dragging it down. So this index benefited this week from that little bit of a bounce back in the commodity sectors, but we're still below resistance, and this market has lots of work to do to catch up to the US. TSX Venture also benefited from that resurgence in some of the gold mining names. You can see it broke a downward trend line. That's the first step in a reversal, and it's encouraging, but realize at this point it still hasn't really made a great rising bottom. It still hasn't started to show optimism. So this market is maybe at the start of a turnaround, but I would continue to be pretty selective in this area because it has a lot of work to do to overcome the pessimism that has gripped it for some time. US Treasuries broke a little pullback this week, and that means interest rates went down a little bit. And you can see here we're probably going to start to move back up towards the top of this channel, and really the cycle of lowering interest rates should continue. US dollar broke to new highs 3 weeks ago, and after stalling for a little bit, which is typical after a breakout, we've seen a real resurgence in that. And it's interesting that the US dollar is strong, but still the gold miners and the energy stocks were able to find some support recently. So we're getting a little bit of a divergence from what we would normally expect. US dollar does look like it should continue higher, and that is generally negative for those commodity sectors. So that's why I'm still a little bit skeptical about the bounce back in the commodity group. There you see the chart of gold. Yes, it's had 3 weeks of, call it a bounce back, but in the big picture, it's still below all downward trend lines, and so I wouldn't get too optimistic here yet. If you're a trader, yeah, you can trade the volatility and the bounce back, but anything more than holding for a few days, and I'd be pretty cautious. Finally, oil chart, well, not final chart, but the final actual chart based on something as opposed to fear. This is the oil chart, and you can see that it bounced back a little bit this week. It's heavily oversold. How do we know it's oversold? Because price is way down below that downward trend line. So anytime markets run away from the trend line, they usually come back to them, and that's a trader's rally, not an investor's rally. You don't want to be buying that if you're taking your eyes off of it for any length of time. This is only something to trade off of, and as a trade, yes, I do think it can bounce back a little bit, but you got to keep a close eye on it because there will be lots of volatility. Final chart is that of the VIX. It's come right back to where it was before the correction. Basically, all the fear has been taken out of the market again, which probably sets up for more fear in the future. That's the way the market works. So given that the US markets are coming up to resistance at the top of that channel, we could see a little bit of a profit taking here as we go into year end. Probably not across all stocks, but maybe motivated in the areas of the market that haven't kept pace this year. All right, so my outlook, still bullish on US stocks, long and short term, but again, a little bit of caution there because we are at the top of the channel. Canadian stocks, Neutral long term because we are below long-term resistance, but bullish in the short term. They're continuing to rally back from the correction. I'm still bearish on both time frames in gold. I think if you're a trader, you can buy here and there, but generally we're still below all those trend lines, so we got to be cautious. Oil, bearish long-term, neutral short-term, simply because it does look like it wants to make a little bit of a bounce back, so we could have a trader's rally for those that can watch those stocks quite closely. The U.S. markets are at new highs, but approaching resistance at the top of the price channel. Canadian stocks doing well outside of commodities. Gold still pessimistic in the long term. Oil showing signs of a bounce back, but longer term outlook remains negative. Tax loss selling will start to be a factor in the weeks ahead. That has been the Stockscores Market Minutes for November 21st, 2014. Have a great week in the market and trade well.